Have you heard about crypto lender BlockFi being ordered to pay $100 million? Obviously, you are here for a reason. Do you use crypto lender BlockFi, or were you about to use it? However, you heard the news about it and you want to know what happened. Why were they subjected to pay a huge amount of $100 million? Well, luckily for you, Crypto Clipper, this video is for you. In this video, we will talk about the crypto lender BlockFi, what happened, and why they were ordered to pay $100 million. As crypto lenders, we have been encountering a lot of problems with clients. That exemplifies their concerns with transparency. With the case against BlockFi, we understand their grievances. This is why we don't believe you need to wait for an authority to tell you what happened. Without further ado, let's get into this video. What is crypto lending? At first blush, crypto lending looks like savings accounts offered by banks, but with cryptocurrencies instead of traditional money. An investor opens an account, deposits cryptocurrency, and earns interest which can be withdrawn at any time. Many deposits come in the form of Bitcoin, but other investors use stablecoins or lesser-known cryptocurrencies which fluctuate in price. The firms typically pay interest rates that change daily, while others get a fixed rate while the money is locked up for a fixed period, as with a certificate of deposit. BlockFi, which previously offered a savings-led crypto finance company, has now solicited over $100 million and $10 million worth of investment to serve through a new business that focuses on lending. Now, what did BlockFi agree to? As part of a settlement agreement with federal and state securities watchdogs, BlockFi was fined $100 million. In order to allow new American accounts to receive these loans from BlockFi, the SEC has approved a plan. This would mean that newer accounts can be allowed to accept a loan from the company if their company risk is evaluated by the company before these investments are made. BlockFi has 60 days in which to fulfill the SEC's condition. In an interview, the company's CEO and founder, Zach Prince, dubbed their interest accounts as one of their most popular products that offers high yields on cryptocurrencies and stable coins. Using this product, users would lend digital assets and earn interest. As of February 14, 2022, following the statement, the BlockFi interest accounts, or BIA, have been made unavailable to new clients from the United States. Prince, in response to the settlement, highlighted several key points. 1. It's neither admit nor deny. What happened can only be interpreted by clues that are left. And 2. Up until now, there have been no rules for trading securities on crypto exchanges. These cases, especially with plans for registration in the near future, make it easier to get around the current atmosphere of uncertainty by laying out clear guidelines from regulators. Though they still have to wait and see how the SEC responds, some blockchain-based companies are hoping this will set precedents for others to follow. A number of other volatile companies have been the subject of scrutiny recently, with many calling for a new era of transparency in ICOs. This incident also gave rise to questions such as, what exactly does BlockFi do, and is it in fact a legitimate company? Let's find out. What is BlockFi? BlockFi offers a cryptocurrency exchange and financial services provider to banking institutions and merchants who are in need of an enterprise-grade solution. It boasts over $10 billion in assets and has 4.5 years experience operating in the market. However, it charges no fees for executing crypto transactions, but also doesn't have as fast withdrawal as seen with other providers like Coinbase. BlockFi does offer some features that you should take advantage of, such as setting up rules on your account. BlockFi opened in 30 disruptive technologies from one of the most renowned outsourcing companies. BlockFi provides advanced financial services to anyone, anywhere, and charges no fees for using a basic trading service like an exchange for cryptocurrencies or traditional assets. However, it does have a withdrawal charge, as well as painfully slow withdrawal times. BlockFi was created as a way for Bitcoin investors to make money by lending their digital assets. which has been highly successful. Additionally, BlockFi offers interest accounts to yield even more profit than regular cryptocurrency investments. BlockFi has been out in the world for only a few months, but it has already been praised as a great way to earn money by lending your cryptocurrencies. The company also offers interest accounts, where investors can make even more profit than regular investments. How does BlockFi work? BlockFi Lending's co-founders also aim to stay ahead of the curve. With most money going towards interest, P2P loans are lucrative, and BlockFi possesses those early adapters that can secure a spot for their company on the platform. BlockFi is developing cryptocurrency credit cards along with prepaid debt cards and a massive array of other digital financial services. Working around business hours can limit a person's potential for earning Bitcoin. With an increasingly short work week, this delay may be tough to avoid for many people. Being only available during regular business hours is a hassle for many people interested in getting a cryptocurrency credit card. With blockchain, goods are delivered and transactions are finalized seamlessly through this technological giant. People can access digital goods and services when they need them with the use of BlockFi's credit cards. Currently, BlockFi offers $10 million loans at 5% annual interest rates to move the needle for emerging organizations and help these businesses succeed. By integrating our funding option with cost-effective payment options and lending guidance, we're excited about increasing financial freedom. With our integrated cryptocurrency funding, BlockFi delivers cost-effective loans for emerging crypto and blockchain businesses in addition to significant payment options to accommodate any financial need. We're excited about building a better future together with new technology so everyone can work and live more freely. In order to regulate Bitcoins and other currencies, financial services officials commented, laws from the 1930s need to be rewritten. Regulators are worried that they don't have the level of authority they thought they have, because new technologies cannot be regulated by rules planned for a personal paper-based world. A check is in order as cryptocurrency and similar assets are taking off. Financial services officials are still trying to understand why the rules are not applying. Meanwhile, new designs can be created at a personal level. Yet not long after the report, this week top executives seem to have revoked their position and stopped at the heels of SEC. Now, it's unclear whether or not the SEC will make a move against Coinbase. Crypto lender BlockFi has just announced that SEC indicated it for breaking securities laws. Gensler said that he does not believe there is any case to make cryptocurrencies be treated differently than funds and investments, but persecutions of large firms in the crypto community are met with actionable charges. BlockFi sold a new type of source of lending to the public called Internet Stable Value Fund that is no longer a security. However, the SEC says that these products should have been registered or qualified for an exemption. BlockFi was just given a pass that doesn't concern an investigation. It is primed to explore the options of dealing with any volatile conditions that may arise with its recently launched hedging solution. The company's advisor made false and misleading statements that its loan portfolio and lending activity were only low risk for 2 years, and most of this lending occurred in 2017. BlockFi neither admitted nor denied the findings. It comes as no surprise then that the proposals for this legislation vary widely by state. In some places, cryptocurrencies are extremely welcome. Coinbase has to make a choice to move their computer databases to the North Carolina servers, so it's locally compliant to break a regulatory blockade. What this suggests is that some state lawmakers view cryptocurrencies as major threats, which only increased as the price of Bitcoin has dropped and hype for blockchain becomes more subdued. As federal legislation gets passed on this increasingly important crypto industry, we expect even more resistance from a variety of different stakeholders. The Securities and Exchange Commission has long been a seemingly insurmountable task for current crypto projects. This is due specifically to the regulator's doctrine to protect investors from potential errors or manipulation that can occur in cryptocurrency trading, limiting how much oversight ICO participants get. With the rising level of value of cryptocurrencies such as Bitcoin and Ether, the only true way to make investors feel safe is to have some type of oversight or regulation. The Securities and Exchange Commission has been slowly catering legislation that gives investors on IC Boost cards more privileges. About 2 weeks ago, cryptocurrency lending platform BlockFi announced it had to repay lenders amid dangers associated with cyber attacks. The decision irked some who saw this attempt as a de facto criminal sanctioning, which could deter more people from buying in, and felt that the solution should have come from the firm rather than legal action. Wanting to provide protections for investors, Mike Gensler asked SEC Chair Jay Clayton during the hearing in September whether this reputation of the crypto market will change anytime soon. Clayton replied they are working to provide better protection, but that new problems and risks arise when considering this new technology. Senator Kennedy pointed to Gensler as someone who could perhaps feel the direct effect of his laws and make them work more effectively. After all, it's his job to regulate people rather than companies based on the authority vested in him by Congress. Previously, arguments could be made that bank balances are effectively insurance policies, backing them like the collateral in a loan. However, the 1946 case clearly highlighted that a securities contract refers to a business relationship with a third party of some kind. The absence of any mention of the Howey test may seem confusing, but it's not. The issue at hand is whether or not Digital Orange Ownership Tree Company is liable for misrepresentations by those workers and representatives who handled selling the company on the idea that it agreed to be managed by previous law and following the Howey test, when in fact it didn't. According to the report, both BlockFi and Coinbase have been threatened with mystery liens. They claim that business was next in line for similar SEC scrutiny, as digital asset lenders like Celsius and Gemini have been subject to similar scrutiny. It meant Canadian company Voyager Digital could only expand its crypto services in Quebec, with which it already has a partnership agreement. BlockFi settled a lawsuit on excessive rate regulation by launching to $100 million. With the new settlement, they will also offer repayment obligations at market rates, as well as annualized interest based on a short-term treasury bill rate of its choosing. If you ask why this matters, well, high-yield crypto savings account, which provide investors with fast and easy access to capital without the need for KYC procedures or confounding private micro-lending apps, are becoming popular. You can always find good money-making opportunities, so you've got to keep your eyes on the industry. High-yield crypto savings accounts, marketed as an inflation hedge and a less risky way to invest in digital assets, have become popular in the sector. Companies including Gemini said they were cooperating with an industry-wide inquiry into interest-bearing accounts. Companies including Hermes and UBS were already under investigation for their involvement in such accounts. With the recent announcements of Gemini, Circle, Celsius, and others releasing products that offer high-yield capabilities, it makes sense to use a platform like BlockFi for your crypto lending needs. Crypto.com is joining the space by offering high-yield IRAs to its customers, which are starting at a 1.2% APR fee that drops to 0% APR for holders who keep 100 or more BTC in their account on average for 12 months. Some companies advertise use of artificial intelligence, machine learning, or predictive analytics are under investigation by the Securities and Exchange Commission. So now questions like, is BlockFi a safe and legitimate company, hangs in your mind right now? Well, legitimate is subjective, and despite its lack of governmental regulatory contact, BlockFi fails to disclose the proper information required of a securities business. With their NY mortgage license and insurance policies, your savings are not guaranteed through either FDIC or a state piggy bank. An unsafe world requires time, care, and diligence that should have been paid to legal procedures on the platform. In 2018, it's clear that these these precautions were not taken. BlockFi was able to establish government and legal oversight over their existing digital lending platform by filing for an SEC offering and reworking their appeal of the BlockFi settlement agreement. With nowhere to hide, crypto companies need to be vigilant in constantly evaluating the waters. If a country passed a law infusing these areas with clarity, then we can't help but draw parallels to our own industries. Isn't this a good thing? While the future of crypto is in doubt, BlockFi shows that it is possible to accept crypto from individuals and offer loans to many with it. But there are significant risks when you do so. As more states, governments, and international organizations move towards establishing rules for the cryptocurrency industry, new loopholes will arise. Therefore, it is important to be aware of these regulations and how they may affect your company or project. Inside the SEC statement about BlockFi, Commissioner Hester Pierce writes, "Rather than forcing transparency around retail crypto lending products, today's settlement may stop them from being offered to retail customers in the United States." After the SEC has ordered a crypto lender like BlockFi to pay $100 million and shut down its operations, more crypto exchanges have been reported as delaying large trading volumes earlier in the day. Many users are asking, what happens next? The crypto lenders won't be able to continue as is, but new lending products will soon launch under existing securities laws. BlockFi, a content creator on Crypto Lender's platform, may need to now jump through more hoops with the SEC in order to succeed in the market. The high yields of the service are at risk of being toppled by complex regulations that cannot be overcome merely by potential profits. That's it for this video, Crypto Clipper. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon.